Welcome back, everybody, to Altcoin Daily. My name's Austin. Happening right now in Congress, there are 6 crypto CEOs testifying before a skeptical Congress on the future of cryptocurrency in the US. In today's video, I want to play you a series of clips so you know, as a crypto investor, exactly what is happening in our industry. Because if you're interested in making money with cryptocurrency, click subscribe right now. We drop a video every single day demystifying this cryptocurrency market. In this first clip out of 3 that I want to share with you today, this is Brian Brooks, who is now the CEO of major crypto company Bitfury Group, explaining to US Congress why cryptocurrency is inherently more secure and more transparent than the traditional legacy system. And if you're truly interested in protecting the American people, like you claim, talking to Congress here, then you should like this. Watch.
Loudermilk, it's good to see you, and I appreciate the question. The simplest answer, as I said earlier today, is that blockchains are as much about transparency as they are about security. So one of the biggest problems when you think about the biggest cyber hacks we've ever had in the United States is how long it took for us to figure out that they occurred. The case of Target, the case of Equifax, some of these things. We found out days and weeks later by accident that they occurred. And if you think about the Equifax hack in particular, initially we thought it was a small problem. Weeks later, we learned it was a medium-sized problem, and only months later did we learn it was a gigantic problem that involved all of our data because there was no transparency. The thing about blockchains is every single block as it is validated is publicly visible to the network. The other thing about blockchain is it's based on a consensus mechanism. So before you can have a change to the ledger, you have to have a significant majority of all of the validators agree that that's the correct change. And so unlike normal networks where one bad guy can defeat the entire system, here you have to have thousands of computers agreeing at the same time that the change can be made, and even then everyone sees it. That hiding in plain sight aspect is the safest thing about blockchain. It's why it's so critical to our security infrastructure.
Yes, like it, support it, get this information out to as many people as possible. But it is important to understand that with or without the United States of America, this crypto revolution is happening and billionaires will be made for those paying attention. All right, next up, in this second clip out of 3, listen to Brian Brooks explain that we don't need to create another regulating body in the US to oversee crypto. We don't need that. What we need is some basic education for the current regulating bodies so they can understand crypto. Watch this. This is happening right now in Congress.
Well, Congressman, one thing I learned running my little agency is that the U.S., and this is not specific to crypto, the U.S. is sort of unique among the developed countries in our fragmented approach to regulation. So when I hear people talk about the idea that we need one regulator for crypto, I would say we should first have one regulator for banks, but we have 3 of them, or if you're an investment bank, 5 of them. So that's inherent in the system that we've got. What I say to that is the last thing we need to do is add another regulator to a system that's already got dozens of regulators. What we need to do instead is have parity for crypto activity along with traditional finance. If I'm a crypto lending platform, I should probably be regulated by the FDIC. If I'm a crypto trading platform, I should probably be regulated by the CFTC and SEC. But somehow we treat crypto because it's new as different from everything else. And I'm going to argue that crypto is just a step function improvement in the system. We already have a regulatory system. The laws are super clear how it works, but there's something about crypto that scares people. I don't know what it is. Maybe it's just because it's new. But I remember in my banking law class when banks were first allowed to use computers to keep ledgers, people sued over that at the time. I remember when I was a second-year lawyer and we got email, and the ABA said lawyers couldn't use email because it would travel over this mysterious network of computers. These all seem ridiculous today, but it seems like we haven't really learned the underlying lesson, which is technology usually advances human flourishing. We have a regulatory system. Let's use it.
All right, give me your thoughts on this down below. Seriously, I want to know what you think. Comment down below your thoughts. But understand that we are seeing these nation states, like the US, like Australia, etc., putting in this basic regulation because they want to make money off the crypto industry. Case in point, before I play you that third clip, Australia has just announced a massive shakeup to crypto regulation meaning the Australian government will launch the biggest payments reform in 25 years. This is coming directly from their treasurer. Things are moving fast. In an attempt to modernize Australia's payment systems, the new regulations will broaden the definition of services and products that can be regulated, taking cryptocurrencies and digital assets out of the shadows into a world-leading regulatory framework. So reading between the lines here, big money wants to get in, they want to get involved, but they need regulatory clarity before they can do that. And that's what Australia is giving them. And I do sense that some of you in the audience are screaming right now, we don't need regulation. We don't need you. Cryptocurrency is fine with us. And my response to that would be that if you want mass adoption, then this sort of thing is inevitable. If you want mass adoption. And for perspective, more than 800,000 Australians right now own some form of crypto assets. And that figure is about 3% of the population, leaving the other 97% of that population still uncryptoed. Do you think that number is going down? Or do you think that number is going to keep going up? You tell me. But moving forward, in this final clip I want to play you today, while there's so many significant people speaking in Congress right now, like the CEO of FTX, who you just saw, the CEO of Coinbase, Brian Armstrong, etc., I want to play you one more from Brian Brooks. I don't know. He's just killing it today, speaking in front of Congress, dropping some knowledge. Listen to this U.S. congressman express concerns that the crypto market may be a bubble, suggesting that the U.S. may be best to step away from it. Listen to Brian Brooks explain that if you're concerned about massive volatility swinging both ways, that's because this industry is so new. What we need from the U.S. is more infrastructure, more liquidity in this market, not less. And that will only make the U.S. stronger. Watch this.
At what point should we become concerned about the possibility of a bubble? Let's start, if we may, with Mr. Brian Brooks.
Well, thank you, Congressman Green. It's terrific to see you again, and I always find your questions extremely perceptive. What I would say about that question is a lot of the price volatility of cryptocurrency has to do with the early stage of the market and the thinly traded nature of the asset compared to, for example, U.S. real estate, global equities, or anything like that. I think the message I'd land with this committee in response to your question, however, is some of the things that make U.S. equity and debt markets more stable and less volatile have to do with the fact that there's a lot more price discovery in those areas. And what I mean by that is, you know, in the U.S. we have regulated equity mutual funds. We have derivatives products and futures products that allow the free trading on a 24/7 basis that provides the market with forecasts of what's happening in the ecosystem. In the world of crypto, the U.S. hasn't responded by developing those tools for price discovery yet. And so the result in a relatively new, relatively thinly traded market is that one person unwinding their position can have a massive effect on the price. The last point I would just make very quickly is something like 80% of Bitcoin holders have never sold a Bitcoin. And so when you hear about a day when there was a giant price drop in Bitcoin, often it turns out that there was one or two large traders who were unwinding a leveraged position, and the vast majority of holders have enough confidence in it that they've literally never sold a unit of it. So I would argue we need more liquidity and more price discovery to tamp down volatility, not less.
Yes, great perspective. As these hearings unfold, I will keep watching, I will keep this on my radar, and as the news comes out, I will keep you updated. Real quick, let's take 60 seconds and thank sponsor of the channel, the BlockFi Rewards Bitcoin Credit Card. Introducing the BlockFi Rewards Visa Signature Credit Card, where you can earn an unlimited 1.5% back in Bitcoin on every single purchase. So whether you're buying groceries or gas or Christmas presents for your puppy, why not earn Bitcoin back on those purchases that you'd be making anyway? And by the way, what makes this Bitcoin credit card different is with BlockFi, there is no annual fee, which I like. There is no foreign transaction fees, which I love. And you can see if you're pre-approved with no impact to your credit. There is a link down below. That's blockfi.com/altcoindailycc. Link down below. Check it out. Because if you use our link, you can earn 3.5% back during your first 3 months on every single purchase. Also, this card is metal, it is black, it looks quality. Anyway, link down below, check it out. That is the video. My name's Austin. Like always, see you tomorrow.